Hey, it's Jacqueline here. And as many have already heard, the Bank of Canada increased interest rates yesterday. So, very naturally, we're getting a lot of calls from clients trying to get a better understanding on what the overall impact this is going to be on them. So, we naturally called our favorite mortgage expert in the Cobourg, Northumberland area, John Greenlee with the Mortgage Center, to provide us a little bit of insight on the impact of the changes here locally. Thank you for joining us today, John.
Thanks for having me, Jacqueline. Appreciate you having me on here today. And yeah, we've been getting a lot of phone calls about interest rates as well.
Yes, yeah, I assume your phone's probably been ringing off the hook. So, yeah, if you don't mind just kind of taking over and giving us a bit of insight as in terms of kind of what the impact of these changes are going to be.
So what we've done here is I've got on my screen our mortgage app, and we can kind of show an idea of what impact the rate change is going to have on the individual borrower. So last year, our average mortgage that we provided to customers was in and around $350,000. So we've got $350,000 in here as a mortgage. And the average rate leading into yesterday for borrowers who took out a mortgage with us over the last couple of years was about 1.7%, which you'll see down here is 1.7% on a variable rate. And we're assuming an amortization of 25 years. And you'll see at the top of the screen there, that would be a monthly payment of about $14.32 and 91 cents per month. So what ends up happening here with yesterday's rate increase is now rates are going up 0.5%. So it's obviously tied to prime rate, and you'll see how quickly that calculated there. But a 0.5% increase if your mortgage is about $350,000 brings your payment up to $1517.81 per month. So the real number on a $100,000 average is about $24 a month. So if you want to look at it that way, your payment went up about $24 a month for every $100,000 of mortgage you have if you started at a 25-year amortization.
Okay, yeah. So, and I think that's an important point to really kind of illustrate here is that although when the numbers come out that it's doubling in terms of kind of overnight, or going up 50%, obviously that makes people really nervous. But when you really look at the dollars and cents of it, we're really talking about the equivalent to maybe going out for a dinner, if that, on a monthly basis in terms of kind of the overall financial impact on your mortgage. Probably about the $1 million question everybody always asks in terms of kind of dusting off that crystal ball of when is or isn't that time in terms of when they should be locking in for a fixed rate. So could you provide us some insight on in terms of what you've been telling people in terms of whether or not you feel it's the right time to do that?
Absolutely. So today, if you're in a variable rate, most lenders will allow you to lock into a good 5-year rate, and a good 5-year rate today is about 3.84%. So you would really be increasing your payment once again by another couple of $100, essentially giving the bank money just to lock in. So it doesn't really make a lot of sense if you're already in a variable rate to do that, because you're literally giving the bank hundreds of dollars a month unnecessarily. We've been coaching people to up their payments or give lump sum payments to the lender, which knocks their principal down faster while the rate is still lower. And a lot of our clients have been doing that, and it's going to save them in the long run.
Yeah, so there you go. Good advice in terms of, perhaps maybe not is the time. And is it your opinion that variable then is still the best way to go?
Yeah, I think so. Now it's obviously on an individual basis, and I always lay that out to people. It's not me that's paying your mortgage, it's you. So if you will not sleep at night, you should take a fixed rate. If you're going to be constantly thinking, oh my goodness, what's going to happen with my mortgage? Don't take a variable. If it was me, I would still take a variable right now because of the difference between the variable and the fixed rates and what I just illustrated there in the difference in payments. It just makes sense to me.
Now, one thing I want to ask about is in terms of what is the overall impact on people that are looking to get into the housing market right now from an affordability perspective. Obviously, we've had the stress test now for a couple of years, but what are you saying to people in terms of guidance for those that are currently still out looking for a home that this will have as an overall impact on their purchasing power?
Yeah, so that depends on if they are taking a variable rate or a fixed rate. So the way the mortgage qualifying rate works is it's either 5.25% or the contract rate on your mortgage plus 2%. So today, variable rates are still low.
Mhm.
They're under 3% still. So when you add 2%, that still brings you under 5.25%. So if you're trying to get a variable rate, nothing has changed yet in terms of qualifying. However, if you're on a fixed rate and you're at 3.84%, you're now qualifying at 5.84%. So that will diminish your your ability to qualify.
Okay, yeah, no, that certainly helps. So, any other thoughts in regards to what you're seeing, or guidance or advice you'd give people that have questions about what's happening with the interest rate change?
Yeah, don't panic yet. The sky is not falling.
Mm.
It should really be expected that this is happening, obviously, with inflation. And also the fact that at the beginning of the pandemic, the Bank of Canada cut their rate by 1.5% in a
Mhm.
matter of weeks.
Yeah.
Um, they've only taken back half of that cut. So
Mhm.
it should be expected for sure. You're going to
Yeah.
see another 0.75%, possibly 1.25% within the next 12 months or so. The real question is, what are you comfortable with when you're buying? How does your budget look? And what kind of flexibility you want in your mortgage, whether you want to be able to move out of it quickly, and what type of penalties you might have if you took a fixed versus a variable.
Mhm.
And yeah, it also gives you that flexibility of if rates go back down. I hate to use the R word, but if rates going up cause a recession, do the rates then come back down sometime in the next 5 years? I don't know.
Mhm. Yeah, yeah.
Possibly.
Yeah, and I think in terms of a lot of us in the industry would certainly agree that obviously rates were taken down for a reason. During the height of the pandemic, we always knew this was coming. Exactly as you said, I think you put that very well. The sky is not, in fact, falling. And I remember back to when I bought my first house, I paid about 7.6%. And at the time, that was a great deal. So I know it can be very scary for people out there when we hear interest rates are increasing, but when you really dive into the numbers, at the end of the day, it's not a significant impact. And it is really something that's going to continue to hopefully bring more of a healthy normalcy back to the overall housing market.
I agree. And there's always almost always an option for people if they are having a cash flow issue. You can make changes to your mortgage.
Yeah, and absolutely. And great segue on that. So, for people who have more questions and want to reach out to you or connect with you, what's the best way to connect with you?
Yeah, so you can reach us at the office. We're here Monday through Friday, except for holidays, from 9 a.m. on. 905-377-1684 is the number. Or you can always email the office at cobourg@durhammortgage.com.
Okay, perfect. Well, a pleasure. Thank you as always, John.
Yeah, thank you, Jacqueline.
Take care.